Hi there. Welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Wes Hanson, CEO and President of Thunder Gold. Trades on the TSX Venture Exchange with the ticker TGOL. How you doing today, Wes?
Not bad. It's been a busy morning. We released some new results this morning, so it's been fairly busy and hectic. But glad to be here, and thanks so much for taking the time.
Yeah, and like before we get going, I was a pretty eye-popping result. These aren't just some results; these are pretty phenomenal. And what maybe you could share with the audience just off the hop. What did you announce this morning?
Well, this morning we announced a single drill hole that intersected 661.5 meters of 0.55 grams per ton with a number of interspaced intervals of 15 to 20 meters over a gram. And as a wise man said to me today, it's like 5 football fields of gold, which is pretty appropriate comparable.
Yeah, those are some eye-popping numbers. Like consistent, that is a long way to have consistent gold. I haven't seen too many of those in my time, so it looks like you are onto a pretty good gold system. And the project is called the Tower Mountain Project. So there you go. Your drill results are as tall as a tower.
Well, Ontario mountains tend not to be mountainous, but there is certainly some topographic relief, and I'm quite grateful for it because it's that the Tower Mountain itself is the intrusion, which I believe controls the entire mineralized system. And you take that intrusion away, and you probably got nothing but dust. So I'm glad it's there.
Awesome. Well, why don't we start with maybe getting into your background? You're a geologist. You've got some impressive experience. Maybe if you could do that thing that a lot of us don't like to do, talk about yourself a little bit.
Sure, and it's not my favorite part of the job, but basically, I'm a geologist. I graduated in 1982 and started working in the industry pretty much right away. I was fortunate. I left university and immediately started on a gold project in the Northwest Territories called Culleton Lake. That was my first ever job in the industry. I was assigned to look after the drill program at their new target at Sheer Lake. That was an incredible experience. Lots of excitement. Within 3 or 4 months of me joining the company and starting that job, they decided to go underground. I didn't know any better. I like to say that experience is where I learned how not to run a gold company. It was an aggressive approach for sure, but there were reasons for it that probably I'm totally unaware of. But they went underground. Basically, the great grades that we were seeing in our drill holes lacked the continuity to allow it to be mined in an efficient manner. And basically, that particular asset, I would term it as a failure. Went from there, I jumped to Grangus Exploration and the old Tartan Lake mine in Flin Flon, Manitoba, and that was a great experience as well. Brought that one from exploration drilling right through to production, commercial production, worked at the, during the development of the mine, and again, very exciting times. And interestingly, my son, who's also a geologist, just accepted a job there with McEwen Mining, and he'll be moving to Flin Flon as well in the not too distant future. So that's what goes around comes around. Did a couple of other junior companies, small gold mines, high grade, narrow quartz vein stuff underground, most of which struggle largely because junior companies don't have that financial backing to allow them to efficiently develop those type of assets. I eventually transitioned to, working in major open pit mines throughout Nevada and built the Brewery Creek mine in Dawson City in the Yukon, which was that was a tremendous experience simply because heap leaching at minus 45 is something everybody should experience in their life. It was lots of challenges on that one, but then transitioned from there into the majors and worked with Kinross on a number of their major large open pit projects in Nevada and Alaska, down into South America and Chile and Brazil. Led kind of the technical team in the expansion of the Paracatu project, where they moved it from 180,000 ounces a year to 600,000 ounces a year, basically by drilling a very similar sort of system to what we see at Tower Mountain, just consistent gold grades, not 5 football fields long. It was probably only half a football field, but it was predictable. And that's what really made that project take off and tick, is that predictability. You always knew what you were going to feed the mill. They had an extraordinary local management team that was a huge benefit in bringing that mine and advancing that project. Transitioned then into consulting for a little while and worked for Kilbourne, S&C Lavalin, did a lot of time seeing major deposits throughout the far east of Russia. Was the first North American geologist to see the Kupal project, recommended that it be taken over by a couple of Canadian companies I was familiar with, but it eventually went to BEMA, which was a wise investment on their part. And then kind of filtered back into the majors, or semi-majors, with Western Goldfields, built the Mesquite mine in California, another great asset that's still producing today. That's where I, picked up and learned a lot about these open pit, large tonnage, low grade deposits and how you keep them going and how valuable they can be to the bottom line of any company, regardless of its size. CEO of Noront had to come back to Canada and take the CEO of Noront. That, I would have to say, the Eagle's Nest deposit, the copper, nickel, platinum, palladium deposit there, is probably the highest value asset I've ever worked in my career. Fantastic opportunity, lots of high grade, and then sort of moved slowly towards retirement. Did some time in the Dominican Republic on an exploration job called Unigold at the NADA concession in the Dominican Republic, and was sort of slowing down and looking to enjoy golf and honeybees and all that good stuff. But I was really not looking for work when this opportunity presented itself to me. I was approached by the CFO of the company, David Speck, asked if I was interested in being the CEO of a junior. And I said, fuck no. I'm having a good time. I don't need that aggravation. But, they were very persistent and they encouraged me to look at the data. And I had a rainy day and sort of sat down. And the first drill hole I looked at was hole 22, drilled in 2022, hole 135. And I was looking at it and it was 465 meters, averaging 0.5 grams a ton. And that caught my interest. So I scratched a bit deeper, and 100 meters away, there's another hole that was hole 120. It was 400 meters at 0.46 grams per ton. And both of those holes, half of that 0.5 interval length that was consistently mineralized through every rock type, through every alteration shift, they all had, 50% of each hole was above a gram kind of deal. And I'm saying, this is really interesting. And I was puzzled. So I spent my whole weekend looking at the data. That's what, geologists do. You get immersed in the data because the data tells you a story. And you look at this stuff and you see that consistency that just blows through volcanic rocks, which are kind of the traditional hunting ground for gold deposits in Marquis and Greenstone belts. It would just continue right through the intrusive rocks, which are supposed to be barren, with absolutely very little change in the tenor or the grade of the mineralization. And I'm going, well, this is highly unusual. What are we looking at here? And started to scratch it deeper and deeper. And it took a long time because visually I went up and I looked at the drill core and I have to say it was a very humbling experience because it was the only time in my 45, 50 years in this industry that I wasn't able to look at a couple of drill holes and say, okay, well, that interval is going to run a gram and that interval is going to run a half a gram and that interval is going to have nothing in it. I couldn't see any visual clues in the drill core that said, guaranteed 100% this is going to run and carry grade, and this isn't. So that was baffling, and it just became a mystery. It's like a mystery novel that you can't put down. You just got to keep turning pages and trying to figure out what's going on and look at it in different ways. And that's what attracted me and encouraged me to take the role because, let's face it, 400, 500, 600 meters of mineralization in a single drill hole, those type of opportunities don't come along every day. And in a unicorn type deposit, which could be something totally unique for our Key and Greenstone belt, certainly the Shibandu Greenstone belt. We've got the benefit of location. We've got, it's easy to get to. You don't have to risk life and limb and helicopters and fixed wing aircraft and stay in a camp. I can jump on a train from my house here and just outside Oshawa and be in Toronto within an hour, get on a plane and be in Thunder Bay in 2 hours, and then be at the site a half hour later. So very convenient, great asset, great opportunity, and most of all, it's interesting and fun. And you can't overestimate the importance of having fun at your job.
For somebody who's hearing of Thunder Gold for the first time, maybe give us a quick pitch in a sentence or two.
Well, basically, the Tower Mountain project, our entire focus of the company is Tower Mountain. We've divested all the other exploration projects that the company had. This is a 40-year, I guess I'm not being brief now, I'm getting long-winded, my apologies. So, it's a 40-year-old company. It's had a number of different iterations. There's about 200 million shares issued and outstanding when I joined the company. I looked at it as this is the key asset. So we focused in on Tower Mountain. The reason why: large tonnage, low grade, consistent mineralization, very little drama, good metallurgy so far, and I'm not anticipating that to change. No real environmental issues. The rock is acid rock consuming, so it's not going to be leaching metals into the environment over a prolonged period of time. Just a lot of pluses, and all the infrastructure is there. We are not asking the government to build anything because they built it. It's already there. The highway is right at the gate. The airport in Thunder Bay is right at the gate. People can live and work in Thunder Bay. In terms of employee attraction and retention, you can't find a better location in Canada. And, it was just too good an opportunity to pass up.
Excellent. And what's the approximate market cap today of the company?
Well, today it's kind of trading in that $40 to $42 million market capitalization range. That's based on the strength of the latest results that we put out this morning, the 661 meters at 0.55 grams. So, we've seen a surge in volume today, and rightfully so. And hopefully we sustain that as we're in the midst of a drill program. So news flow should be consistent and it should be good.
And do you own 100% of the asset?
The company owns 100% of the asset. That is correct. There's residual NSRs that are owned to some of the prospectors that originally staked the claims, but essentially the company owns 100%.
And it's got a relatively recent MRE resource estimate. I know you guys are in the process of doing some drilling and plan to sort of upgrade that, and we'll talk about that in a little bit. But maybe you can just talk about what do you have now in terms of of resources.
Yeah, so currently we've got an inferred resource of about 3 million ounces and an indicated resource of another 500,000 ounces. The average grade is 0.5 grams per ton, and it's in the range of 350 million tons of ore containing that gold value.
And is that something that's like an open pit again, this is close to surface?
The mineralization starts at surface and it goes to the very deepest. I mean, the hole that we just announced today is currently our new deepest drill hole, and it's mineralized from a depth of about 88 meters all the way down to the bottom of the hole. So,
what type of deposit is this? You've got a lot of experience working on different open pit, underground, different types of mining style of gold projects, mine projects. Explain this type of deposit for us.
Well, I personally think, we've got to do the work. Look, I'm not a theoretical geologist by any stretch, so we've got to get some, whole rock geochemistry and start developing that genesis story. But based on what I'm seeing, you have the Tower Mountain intrusion, which is kind of the center of the intrusion. It's a gigantic plug, the vertical plug that comes straight up through the host rocks, the host volcanic sequence. That was a multi-phase intrusion. It was active over a period of tens, if not hundreds of millions of years during the Archean period. It's constantly injecting new intrusive rocks into the suite, and every intrusion basically fractures and moves the surrounding perimeter, the perimeter halo surrounding that semicircular intrusion. That fracturing basically was the ground prep, and as successive phases of the intrusion happened, you just had these hydrothermal solutions that were circulating, carrying gold from depth, bringing it up, depositing at surface, and just repeat. And it just repeats and repeats over time. And that's kind of a signature of the supergiant deposits, like the Cripple Creek, for an example, in the United States, or Detour Lake to a lesser degree, and some of the big mines in New Guinea. It's just active for that long period of time, and you had this constant injection, not of super high grade gold like you'd typically see in Archean shear zones with quartz veins with the visible gold and the splashy numbers. You don't see that, and I love it. I love that that's not there, because it tells me it's a different type of system, it's a different type of beast, and that's probably why it's still sitting there for us to acquire it, because it was considered too low grade for past exploration companies to take a serious look at.
And so it sounds like it might have some scale potential, like it could get bigger. Is that what the company is sort of thinking? Or are you really in the process of trying to take your inferred ounces and move them to a higher cap?
Both. I think this is the largest gold system I've ever worked on. That's kind of what I'm seeing. It has that potential. Now, it's going to take a lot of drilling to get you there. We've only drilled 50,000 meters on this system so far. This is a system that demands 500,000 meters of drilling in order to flesh it out. So our immediate focus, because we are a junior, and because like all juniors, we're kind of limited by capital. Our immediate focus is, in order to drive shareholder value, is to work within our existing resource pit, take that inferred resource of 3 million ounces and upgrade it to the indicated status, define the high grade component if possible. And there's the tricky bit, because it's kind of like a lightning bolt comes up. You have all of these fingers and discontinuous seams, but if you do a good job drilling off the system, you're going to define that higher grade component. And if you look at our mineral resource estimate in 2026, you can see the optionality in the grade cutoff table. If we go from a 0.19 cutoff, which constrains that 3.5 million ounce resource, we bump that up to a 0.4 cutoff. Basically at 0.4, we still got 2.2 million ounces, which is nothing to sneeze at, and lots of white space inside the pit, like areas that were outside of the interpolation limit of the resource estimate. So places we can drill immediately in the pit to add ounces. And then everything that's between 0.4 and 0.2, that's incremental ore. So you take that out, stockpile it until late in the mine life, and then campaign that through the mill at the end of the mine life, and you're making gravy, right? That's the way the big open pits operate. Now, lately, I'm starting to look at this. There's such a well-defined core, which we happen to drill our hole today that we released today right down through the gut of that core. There could be some potential there for some sort of a block cave operation. There's a lot of engineering that has to go into it before you can look at it from a block cave perspective. But, the rocks are certainly competent enough to allow you to consider that mining alternative, but most likely it's going to be an open pit, at least to start.
And the deposit, does it remain sort of like open? How, maybe you can give some like size constraint? Has it been, you mentioned that you've only just sort of scratched the surface in terms of the drilling that it would need. Does that mean that you've only drilled a small part of the system? Maybe you can give some size, so we can visualize it.
Sure. So the core intrusion itself that controls everything measures about 3 kilometers by 2 kilometers. So it's sort of an oblong oval. And think of it like a donut. So we've drilled, where our resource sits, we've only drilled 1 or 2 bites of the donut along the western contact. The geology, the geophysical signatures, everything else that surrounds that core intrusion, that semicircular donut hole, for lack of a better way of putting it, that entire perimeter is open. It's only been drilled in one other location on the opposite side of the intrusion, about 1.5 kilometers away from where our resource pit is. And at that target, where we drilled on the opposite side, we turned exactly the same grade distribution over exactly the same interval lengths down the drill holes, like 50, 60, 70 meters of 0.5, within 100 meters of 0.3. So we know there's similarities on the opposite side of the intrusion. But more interesting to me is our primary exploration tool is airborne geophysics, the MAG survey. The MAG survey of that intrusive core, the core shows up as a high, MAG high, and then almost entirely enveloping that MAG high in almost an unbroken circle is a MAG low. It extends for about 500 meters away from the contact of the intrusion. And on the west side where we've drilled it, that entire 500 meter halo is mineralized. And it's 500 meters on the north side, and it's 500 meters on the east side, and it's 500 meters on the south side. None of those targets have been tested. Not a one, except for the one small area on the eastern side of the intrusion. So I think personally, we've only tested about 20% of the halo, the prospective halo. And if we've got 3.5 million ounces in the part we've tested, I would think it bodes well that we would find additional ounces in the remaining halo.
Now we're going to move on here. This is a large tonnage, sort of low grade, averaging just under 0.5 gram per ton. A lot of investors, myself included, the first time we chatted, I sort of, questioned you on grade. Why are you confident that grade is not a problem here?
Well, look, the age-old adage is grade is king and good grade makes for good miners, which isn't true, by the way. That's rarely the case. The best way I can put it to you is every drill hole, you have to look at it as its area of influence. So in a high-grade system, like you get these spectacular hits of visible gold. When you step 10 meters away, chances are you're not getting the same result. If I step 100 meters away, which I just did today, I'm 100 meters away from the nearest drill hole, which was 135. 135 was 460 meters at 0.51. The hole we released today is 661 at 0.5. So that projection around the drill hole, if you look at it, if you do a 25 meter radius. So you got to go back and do some high school math here, I'm afraid. But a 25 meter radius basically gives you about 7,800 square meters of influence surrounding that drill hole, right? And if you look at it, that's 15,000, 16,000 tons in that range. At a grade of 0.5 grams per ton, that's 262 ounces per vertical meter. I got 600 meters. Now, if you look at it, if you got 500 grams per meter, right, you got a meter, right? So it's like the component of ounces for any mine is critical. It's not just grade. You have to have scalability. So what we have what these high grade hits don't have. I mean, you see a lot of these results, 1,000 grams over half a meter. So first of all, there's only one gold mine in the world with an average grade greater than 15 grams per ton. It happens to be in Canada, happens to be run by the best mining company in the world, Agnico Eagle. And they're making hay at Macassa all day long, and they have for some time. Red Lake had a similar system and a similar upside opportunity. But all of those mines, Red Lake, Detour, not so much Detour, sorry, Dome, Red Lake, those high grade underground systems, the mine in Australia that I can't remember, God, what is it? What's the one in BC, in northern BC? Used to be Pretium. Bruce Jack mine. You know, spectacular results, visible gold everywhere. Bruce Jack hasn't had a sustained grade of over 8 grams per ton in its history, I don't think.
Right.
Meanwhile, Detour's been mining 0.8 grams per ton forever and making 650,000 ounces a year production and making bank for Agnico. So, you know, it's scalability. You have to have that size potential too.
So your type of deposit appears at this stage to be more homogeneous rather than some of the problems or some of the, issues that sort of plague the high grade sort of nuggety sort of systems where, again, you have to drill those on such tight centers to see if how far that sort of visible gold hit continues, and they tend not to continue very far. So I've found in my own career investing that if you're investing in a homogeneous type system, predictability tends to bode quite well. So is that what you're kind of seeing?
Yeah, again, my experience, I think, with the majors and the large open pits and the importance of predictability and scalability and being able to adjust to different situations, that's what's offered in these large tonnage, low grade open pit type deposits. Whereas in an underground mine, if your 15 gram per ton stope goes up in smoke, you're in trouble.
Right. All right. And let's talk. You mentioned at the beginning the metallurgy was looking pretty good. So it looks like you got sort of at this stage from Metwork that's disclosed. I was reading your pitch deck and to prepare, looked like it was sort of mid 80s and in terms of recovery. But that's a very loaded question. So why don't you unpack the metallurgy and then what you're continuing to sort of test for?
Well, look, metallurgy is an ongoing process. You should do as much of it as you can. Again, as a junior, where we're cash constrained, we've got to focus on what drives the greatest value for our shareholders. So that's a drill hole for us. I mean, I think junior companies that are explorers should be putting the vast majority of their dollars into a drill hole or a surface trench or some sort of data point that includes, expands their knowledge of the deposit. Metallurgy is nice to have, but it's something you can do at any stage in the process. We did it early. In fact, I did it before I took the job, and it's quick and easy. You just do a cyanide leach. I basically had the whole 135, God bless its little heart. I ran the whole thing for cyanide leach analysis to compare it to the original assays. Saw very little difference in most cases, which suggests that there was no problem in terms of, potential refractory type mineralization, at least in that hole. What we've done with our metallurgy so far is very simple bottle roll tests. Grind it up, throw it in a bottle roll for 24 or 48 hours, pull off titrates, measure the recovery, measure the residues, back calculate your grade, and say your recovery is X. Interestingly, that 86%, it's an 86% average, by the way, of the 16 samples we've done so far. They're taken from different grade ranges and different locations and different rock types and different types of metallurgy with different types of mineralization. They're as representative as we could get at the time that we took the samples. They include individual point samples as well as composite samples. What we see, and this is not a promotional thing, but it's good to see from a technical perspective, the average grade calculated at from the head grade. So you have your assay that you take when you get your drill core, and then you collect your other half core and you send it off to the lab. The lab assays it a couple of times and comes up with an average grade of the metallurgical sample. What we saw was a slight increase, like 5 to 10%, as we moved from the raw assay data in the drill hole to the metallurgical sample, indicating that perhaps we've underestimated our grade with our drilling. And then they do their test work and they back calculate the final grade. And that back calculated grade was actually another 5 or 10% jump. So it's, the most efficient sample or the most accurate sample you can get in any project is one that consumes the entire sample. When we're assaying for drill core, we're looking at 30 grams to represent 1.5 meters of drill core. And that's what we assay.
Right.
And the MET sample consumes the entire 7 kilograms of drill core. And then it says, well, you had this much gold in it, and we recovered this much. So far, knock on wood, and I don't think it's subject to change. There's a range, and the range is 65 to 95%. And the average is happily 85, and I can live with that. That's a pretty good result.
And in terms of like, what's the minimum that you think you'd sort of need, or more modern open pit mines would need to see in terms of MET recovery?
Well, again, we're looking at a mill situation, so very similar to what you're seeing at Detour Lake and some of the other large open, like Malarctic, et cetera, et cetera. Everything we're going to mine, we're going to shove through a mill and recover as much gold as possible. 85 to 90% is kind of the sweet spot. 92 would be awesome, but I don't think we can get there. We could. Again, we could be surprised. We don't have the option. We looked at the heap leach, the amenability of the system to heap leach recovery, and the gold is so fine in this system, which is again a signature of the consistency of the grade. It's very, very fine gold. You can't see it. The gold is so fine here that you'd recover 20 or 30% in the heap leach. So the next phase of metallurgical test work is sort of look and see what we can get in terms of gravity recovery gold and scavenger, maybe take a look at flotation if we can float it. There's huge strategic benefits to flotation relative to cyanide. Basically, reduce capital cost to your plant. You eliminate cyanide from the equation, which in a permitting world is a huge plus. And if you can get 70 to 80% gold recovery in a flotation con that's saleable, you might be able to make a go of that, especially because the railroad is at the property gate. The port of Thunder Bay is 40 kilometers away. The St. Lawrence Seaway will take that concentrate anywhere in the world. And if we can produce a high sulfide gold-rich concentrate, we could alleviate a lot of problems. So that's on the list of things to do as soon as I get some additional funds.
So what's the plan over the next sort of 12 to 24 months? You mentioned that you're drilling and you're in a drill program right now. What's the size of that drill program? How far are you into it?
Drill, baby, drill. Look, we're kind of wrapping up the final 4,000 to 5,000 meters of about a 12,000 meter drill program. We did a lot of the high risk reward holes early stuff. If you followed the story, basically inside our resource pit shell. So the resource pit shell is like a V. The center of that's well drilled off, but the edges aren't. We don't know what's outside the edges because we're already interpolating information 100 meters away from our outside drill hole, and there's still another couple of 100 meters to get to the limit of the pit. So we drilled some holes in that area. Basically, you can't lose in doing that. Basically, right now, that I call it white space, unestimated space in the model. Right now, that white space is being collected by the open pit. It just means that if there's gold there, it could allow the pit to dive deeper on the high-grade core. So we add ounces. If there happens to be material above our cutoff grade, which is only 0.19 grams per ton, that material offsets the stripping costs associated with collecting that mineralization and allows us to go deeper on the core intrusion again. So we drilled those holes early on in the program, and then we transitioned. The hole that we released today is actually one of the holes, the infill holes that we had planned. We drilled one early just because I kind of need that information in order to plan up the following holes. Cause like you're saying, well, what's over here in this big estimated portion of the model that's all inferred? Is it really 0.5 or is it something other than 0.5? So we got a hole in there, and now we're probably going to follow that up with 2 holes, 100 meters on either side. block out, take all of that inferred mineralization and upgrade it to the indicated status and hopefully drive value, because indicated ounces are valued much higher by the market than inferred ounces are.
And so the announcement you made today with the drill hole, was this was some of the early drilling? So are most of the assay sort of news releases still to come?
Well, so yes, yeah. The simple answer is yes. We did have a strategic investor who made a commitment to the company, and they wanted some very specific drill holes completed. Those holes have been completed, but I'm not at liberty to disclose those until the investor. It's just good practice. Like, the investor gets to look at it first, and they can comment on them. But we will have to disclose that. But and the neighborly thing to do is tell the neighbor what we found on their side of the fence, and they'll get back to us when they're ready. So that information has been shared, and hopefully we'll be releasing those results, and hopefully next week. Vacations are summer vacation, man. Everybody wanted to go away in August, it seems.
Sure. Yeah, for sure. Seasonality happens in our business.
Yep.
Speaking of which, is this a project you can drill year round, or is there a definitive drilling season?
We can drill year round. There are occasional challenges. So like we find in the spring, access to the site can be challenged simply because of the spring runoff. If there's significant rain, there's a couple of sections of the road that we would have to upgrade, our access road. It's only 3 kilometers long, but there's a couple of sections that could benefit for some culverts. Right. I got a great video I'll show you someday of me in a truck going through the water. The water was up almost to the windows of the truck, and I'm going, man, am I going to make it through this or what? Anyway, we did. We got through it, and but it was exciting times. And then, wintertime is really the best time for us to drill, but it introduces challenges in terms of waterline freezings. But I would say there's only a month of the year where we save money. We're more capital efficient if we don't try to drill through the breakup.
Right.
But, investors don't care about that. They want news flow.
That's right. Yep. Drill, baby, drill.
Drill, baby, drill.
So if you look out, 12 months, 24 months, what is the company, what do you want the company and the project to be by then?
Well, again, I think we just keep doing good science. We keep drilling good drill holes that add to our knowledge base, that expand the resource, that basically convert that inferred resource to indicated as quickly as possible. Take a first pass look at the economics of this project with the PEA and sort of define the scope of it. That'll tell us, how big a pit do we really need to make this? Maybe, if you look at that optionality within our resource estimate, it sort of suggests that, at a 0.4 cutoff grade, our average grade is 0.8. Which is the average grade at Detour Lake. And, at gold prices of 45, 46, 4,700 bucks, that's making a lot. That should be a pretty reliable cash generative project. Our objective is basically do good science so that like producing issuers can come in here with the project largely de-risked. They can see the upside opportunity, and they have the cash flow because they have gold production. They have the cash flow that would allow them to do the exploration in an uninterrupted manner, right? That's what you got to get to. That's the ultimate goal. Is if you're going to the street every couple of months begging for money to, $2 million to drill another 10,000 meters or $3 million to drill another 10,000 meters, it interrupts your flow. You lose your people. You're constantly training new geologists. They have to relearn the geology and the legend and what's important and what's not important. I'm on my 4th geological team, I think, since I started with the company. It's just not efficient. It's not conducive to growth and shareholder value. So what we want to do is get to a stage where we've got we're well backed, we're well positioned. We have some strategic partners, some strategic shareholders who see the vision and they want to see this project move ahead. If I'm kind of the next tier down, so you got your majors, they're kind of in a class by themselves, and most of them have their own problems to deal with. But the next guys down the list, like the 100 to 500,000 ounce a year producers that are seeking to sort of join the top echelon at $4,000 gold, they're making more cash than they've ever had in their life. And if they're looking to build their portfolio of projects for resource growth for the future, Tower Mountain should be a perfect opportunity for them. close to infrastructure, low cost. Our drilling costs are $250 a meter. You see a lot of these projects in remote regions of Canada and elsewhere in the world, they're well over $1,000 a meter from their financial statements, which is underestimating exactly what their cost per meter is. So, we're sitting here at $250 all in. That's our geology, that's our drilling, that's our assaying, that's our housing, that's our food, that's everything but the kitchen sink. It's illogical to conclude that if your cash costs here are $250 a meter and your cash costs up here for exploration are $1,000, that somehow magically when you go to build your mine, that the mine down here that's going to cost $2 billion is going to cost $2 billion up here as well. Doesn't make sense. Like that dog don't hunt. If you're 4 times down here for your exploration, you're 4 times up here for your build.
Right.
Because I've lived it. I've seen it.
And so when does drilling sort of wrap up? Is it still planned to wrap up at the end of September?
We should be mostly done by the end of September. We had a couple of delays, as I said, in the spring due to the snow melt plus rain. And then we had another little brief period of time, and a lot of people in Canada are going through this, of course, with the forest fire situation.
Yeah.
Horrible. The smoke was just brutal, and it's hard to get anything done when you're choking. So I think logically you got to plan on probably a month of inactivity during the summers now because of the forest fires. But yeah, we're just we should wrap up more or less end of September-ish and get the results in from the lab and look at the resource update. The resource update will tell us if doing a PEA, if we've got enough converted from inferred to indicate it to proceed immediately to the PEA. But that's the plan.
And so you're looking to update the resource towards the end of this year?
Yep, absolutely.
And then you mentioned PEA. Typically, PEAs are best to do when you've got a pretty good amount in the indicated sort of category, which sounds like something that you are prudently going to wait and see what your next resource. If you were going to sort of move on to a PEA, when do you think that would come out to the market?
Again, probably in that sort of later in the first, just before PDAC, of course. Timing's everything.
Right. Great. Excellent. And do you already have an engineering group sort of lined up to do that?
Yeah, I'm quite happy with Micon. We selected Micon because I've worked with them in the past on a number of different projects around the world with Kinross and other companies in Russia. So that led to some interesting time. What I liked about Micon is they did see the concept or the sort of broad brush strokes of this intrusion-related gold system, and that's just a fancy way of saying a porphyry gold. In some respects. So they were able to see it. They were comfortable with an aggressive search ellipse. We use that model. A lot of people are looking at it and going, well, it's a resource estimate and it's aggressive and all these other negative comments. I use it to guide the drilling. Like before Micon came along, I had my own resource model that I was using to target drill holes. You just target the seams, right? Like, you get these, again, area of a circle and you just target that seam in the circle right on the edge of the circle in areas that look prospective, and we've had a great deal of success with that. And again, that 661.5 meters today at 0.55, that targeted the 100-meter seam, which gives us great amount of comfort in our interpolation of that resource estimate. Now, at some point in time, that's going to stop. Like the alteration halo doesn't extend away from the core forever, but currently we're in a situation where we are drill constrained, and that's a real good problem to have. What it means is you drill more, you're going to find the edges, and then you can start really fleshing this thing out. So some of those high risk reward holes that we've drilled that we're sitting waiting for feedback from our strategic investor on, those are holes that could make a difference to us in some respects.
Great. Let's move on. Cap table. So how many shares do you have issued and outstanding?
318 million shares issued and outstanding and change. Again, it goes back to the fact that this company was it's been around for 40 years. You've had a number of different key projects and a number of different metals and a number of different areas. So there was about 200 million issued and outstanding when I joined the company in 2022. And since then, we've done a fairly good job. It's always distressing when you're issuing shares, particularly at low prices. But we went through a period of time from 2023 to 2024 where we hardly did any drilling.
Sure. Sure.
And basically it's just a slow death. It's painful to watch. And you got the goods. You're just, nobody was raising money and nobody was investing in mining in those days. And the turn in the gold prices caused some resurgence, and we were able to find some new shareholders to come into the story. We've just announced Mike Weckerly and his group, Altitude Capital, have taken, they hold over 10%. So they're a new shareholder and they've been huge for us. Power One Capital is involved in the story. They've been very supportive for us in raising funds. There's a number of warrants that are remaining to be exercised. I think it's about 80 million currently. We just exercised a whack of warrants, brought in $1 million. So hopefully we're in a situation now where we've got good news flow and we can start calling some of those warrants and do that would avoid us having to go back out to the street and raise funds. That being said,
sure.
Go ahead.
So sorry, let's cover that. So on a fully diluted basis, you've got some options and warrants. So you indicated you've got some warrants exercised. What's the average price of the 80 million warrants that are outstanding? What's the strike price?
Most of them are 10 cents. I think almost exclusively they're all 10 cents. And there's an early trigger at 20 cents on most of those. So some of those warrants are in the money now, and hopefully we can continue this forward momentum with the drill bit and get those warrants exercised, and that's a built-in $8 million financing. That being said, if some white knight strategic investor decides I got to get involved in this sooner rather than later, and they make us an offer that offers fair value to our shareholders and gives us the cash that we need to really kickstart the exploration on this particular project, it's absolutely something we'd consider doing. I think you'd be crazy not to.
Right. And so it sounds like warrants is probably the main funding mechanism for the company right now. That's a fairly large number of warrants, but also a fairly large amount of money, capital to be able to put to use if you can get those exercised.
Correct. Yeah, that's the current plan. So, again, Treasury currently sits around, it's probably between 3 and 3.5 million. We do have a couple of other opportunities for undiluted financing that could come in the not too distant future. There's some properties that we've ended that still has, cash payments associated with them. And there's been some offers on various NSRs that we hold that we could use to convert to funding if need be. But right now we're well positioned to complete the year, pretty much everything we wanted to do this year in terms of exploration drilling and the updated mineral resource estimate and, do marketing and
Sure.
pay the bills and pay the lawyers, all the good stuff. We've got enough cash to get through to the end of the year and probably come out into the new year just like last year in the between 500,000 and to 750,000 bucks in the treasury.
Okay, gotcha. Any, with that share count getting up there, obviously that bodes well for like liquidity. I think your stock has a fair amount of liquidity on it.
Yep. Yeah.
You're not, it's, you trade over 1 million shares on a fairly regular basis. Any thought on looking at getting the company listed elsewhere or looking at a bigger sort of like potential US listing or anything like that?
Well, not currently. I mean, we're listed on the OTCQB. I just participated in one of the OTCQB virtual conferences a couple of days back. Not sure haven't got any feedback yet on whether that's improved our OTC trading or not. Again, it's a story. It's a cart before the horse. You got to have a story really before you start going out and doing aggressive marketing in the United States. But we're starting to get some traction. We're starting, judging from the emails. Hey, putting out 661.5 meters at 0.55 opened there was a lot of emails in my inbox after we got the day going from people I've never heard of before. So we'll see if we can keep that momentum. If we could follow that up with a couple of more good holes, then people are going to start gaining comfort with the story and getting involved. Start putting their wallet on the dotted line, so to speak.
How does the share registry sort of break down between insiders, institutions, high net worth, retail?
So insiders hold probably about 18% currently. I haven't looked at those numbers for a while. So, and let's be honest, the biggest insider is our chairman, Elliot Strachan. He's been with the company since its inception 40 years ago. So that's, he's been a great supporter of the stock over the years in a number of different stories, and he continues to support the stock as we advance Tower Mountain. So he's a great shareholder. He never sells. So he holds about 14. Myself and the CFO hold probably 2 to 2.5% each. Actually, that's probably down now with the exercise of the warrants, but in say 2% each. After that, it's the next major shareholder is Altitude Capital, Mike Weckerly. He's at the 10% range. Power One Capital, it's difficult to get a read on their shareholdings, and I'm not going to tell you what exactly it is, but they've been involved in every financing we've done since 2024. There's a few other high net worth investors. Collectively, I'd say the high net worth folks are probably in the 40% combined range. And then the rest is retail.
Okay.
So 40% retail. No real institutions in the story.
Okay. Interesting. With that type of resource. That's a little bit surprising. Maybe that'll change with some of these.
Maybe show me the money, right? Yeah. Show me the money time.
And what do you sort of been doing with your time? Like, what's a typical sort of day look like for somebody like yourself? I'm sure it's like varied and lots going on, active drilling, site visits to the property, but break it down for the average individual, like what your day looks like.
Geez, you want me to scare the CEOs to be, do you?
Yeah.
Well, usually I'm up by 5. I have a dog that likes to come in and wake me up by 5. He figures that's what time people are supposed to awaken. So generally I come out and I got a couple of good hours of working on the computer and getting caught up on the news of the day or the previous day. Usually that's spent looking at results and trying to sort of look at the visual descriptions of the drill core from the site and say, yeah, this is a hole we should follow up on, or this is tracking, more or less in line with expectations. And then it's just a free for all. It's a furball after that. You're kind of dealing with whatever situation arises. For example, this morning it was late comments from Zero requesting some changes to the press release, which is why we had to temporarily halt the stock while we address those. But most of the time, most of my day, I generally work probably in the order of 12 to 14 hours a day on this project, looking at data, planning holes, canceling holes, changing holes. You're kind of adjusting to the results as they come in. And when the results are coming in from the lab, like you got to make sure it's done right. You don't want to be in a situation where you transfer information into the assay sheet and you screw up the transfer. So you got to go through the checks and balances, check the QA, QC, chase down a result, look for a sample tag that's, it's fun. It's a lot of fun, right? Do some interpretation, draw some lines in 3-dimensional space and say, drill here, stupid.
So kind of shifting, thanks for giving us a view on that. Who do you see as the right peer group for Thunder Gold? Who do you sort of get compared to these days?
Well, there's a difference between the right and the logical. So the logical peer group in my mind are the Canadian large tonnage, low grade developers and explorers. So companies like Springpole, Artemis, Blackwater Project, Spanish Mountain, that's also in BC. These large tonnage open pit mines, Cote to a certain degree, but some of those are approaching development. Troilus is another good comparable in a lot of respects. Just large tonnage, low grade assets. Like the bitter reality is, since I joined the industry in 1982, the average grade of most underground mines has fallen from 6-8 grams per ton down to 4-5. And in many cases, there's people out there chasing 2.5, 3 in an underground mine.
Yeah.
So, the low hanging fruit's been picked. In an open pit scenario, I think the first open pit I didn't even know what an open pit was in 1984 or 85, but I think the average grade was around 2.5 grams per ton. I mean, they've fallen. The average grade of most open pit mines has fallen precipitously as well. There's a lot of people out there chasing sub-gram material.
Right.
But I tend to focus in our comparables in our slide deck with Canadian-based projects because I think the world's changing. I think there's a lot of benefits to working in Canada. A lot, not the least of which is personal safety. You're starting to see nationalism rising everywhere in the planet now, in Africa and Latin America, and that sort of keep the goods for. And we see it here in Canada, like keep our oil for Canadians, like,
Sure.
Let our oil benefit Canadians, let our mineral resources benefit Canadians. And it's not a bad mindset, but in other parts of the world, I think there's some political risks that's involved. I think there's some social risks that's involved. We don't have any of that. We're in one of the best mining jurisdictions in the world in Ontario. It's a nice, safe location. It's easy to get to. Again, all my infrastructure's in place. You know, I can rent a car, not a 4x4, a car, and get to the site half the year for sure. So, you know, it's just a good situation.
And looking down the road here, are you sort of like a explore, develop, build yourself, or are you looking to take it to a certain point and then hopefully get acquired? What's the sort of plan?
Both.
Yeah.
Look, I think you have to move down that path towards explore, build, develop. You know, that's just good science, and that de-risks the project to a level where you become a much more attractive takeover target, and you get a much higher premium for your shareholders if you take that approach. Look, I told you I was moving towards retirement. I was planning a life of golf and raising honeybees and gardening and enjoying life and, you know, just de-stressing. I built 6 mines over the course of my career. It's a young man's game. You know, I'm currently working 12 hours a day or more. I have no desire to work the 18 to 20 hours that you usually had to work when you're developing the first open pit heap leach gold mine in the Yukon, for example. And it was terrible there because it was sunshine for 24 hours a day. So you really had no excuse to sleep.
You forgot about that. Yeah.
Anyway, look, it's a young man's game. That being said, you know, like if we do a good job with what we're trying to do here and we flesh out the opportunity, we've got a decent resource, we've demonstrated the economics, we're starting to get interest from institutional investors and majors or not majors or producing issuers. You know, then you go out on an executive search and you find the guy to take, you know, you pass the baton to, right? Like Donovan Bailey said that. Donovan Bailey's on our board. He says, you just pass the baton. I always got it last. He said, I didn't have anybody to pass it to. But
That's right.
You know, you pass it on to the next up and coming group of young people who have that, who have that ambition and that enthusiasm and that drive and desire. And I can transition to become a board member, just a normal, dull, boring, old day-to-day board member. Right? That's fine. I'm fine with that.
So let's we've covered a lot of ground. We'll just sort of do a wrap up here. What's some catalysts that investors should be looking at for the next 6 months to take to the end of the year?
Absolutely. Just watch the drill results. I mean, we'll be releasing those on a fairly continuous basis now that the first batch is out, and we've got more coming in every other day. Just got to get through the quality control checks and make sure it's all bulletproof before we send it out the door. So the number one way for junior companies to add value, in my opinion, is through the drill bit. Speak through the drill bit. Take that through to the end of September, end of October. Do that resource estimate. Try to hit our targets. I think a lot of people have chastised me and said I'm being aggressive by saying 5 million ounces total with 1.5 million of indicated. I think that's an achievable target barring any unforeseen surprises, as I don't tend to make promises I can't keep. So I think we'll be fairly close to that number. And if we do have 1.5 million indicated, then our valuation should double or triple theoretically, because Inferred resources, the peer group companies worldwide are probably trading at $25 to $45 an ounce, depending on the situation. We're currently below that with our largely inferred resource. Indicated ounces trade at a $50 to $100 range. And you've de-risked the project. You've demonstrated to people that you know what you're talking about. You've delivered on your promises. You've drilled the areas. You've delivered the goods in the areas where you said you were drilling. And that's what we plan to do.
For someone finding Thunder Gold through this interview and really learning about it for the first time, what's one thing you'd want them to walk away remembering?
Size. You can't teach size, right? That was the old saying in hockey and football, right? You can't teach big. So you said it was mentioned, and I'm going to give you credit here because I stole your football field analogy with our drill hole, but he says, 5 football fields of gold. Like, think about that.
Yeah.
Like,
5 football fields end to end of continuous gold.
Yep.
It's pretty good.
It was I think that demonstrates really what this project is all about, is that consistency, the predictability. Like, I'm not out there. The worst thing that happens to me when I get the assays back is, I keep looking at the numbers and like, please don't have something in there like 1,000 grams, because I don't really want to release it. because it's meaningless, right? We had a couple of single hits higher up in the hole of 7, 8, 9, 10, 11, 12 grams. Okay, I'll flag it so that investors can do their own math and see that, but it's isolated, so it's broken out from the surrounding mineralization. But
Sure.
it's there. I mean, those things are there. You just can't predict them. So why bother?
Well, Wes, I really appreciate you giving us a good hour here, top to bottom. Good initial first look on Thunder Gold. Trades on the TSX Venture Exchange with ticker TGOL. And congrats again on the drill intercept that you announced today. I saw Atrium, who do some research coverage, put out a nice note that reached my inbox early this morning, and got a good read on that. So anyways, Wes, really appreciate you stopping by. Hopefully we can catch up again here after you get a few more drill holes out, and maybe you could give us a slide by slide sort of walkthrough. We can really get some visuals on sort of the 3D sort of nature of the deposit.
Absolutely. It'd be my pleasure. I mean, we can go live 3D if you want. I mean, that's always entertaining in real time, but
yeah,
it was great to be here. Thanks very much for taking the time and for your very thoughtful questions. It's hang on to your hat. Train's leaving the station.
Sounds great. Thanks so much. Have a wonderful day.